Hey guys, welcome to another video. In this video, we're going to be talking about time-based versus price-based trading. Okay, so we're going to be looking at which approach to trading is actually good for you, or rather, what is really best for you. Okay, so this is going to be a quick guide, and I basically ask you guys to listen carefully. Okay, this is going to be really important. All right, so I may or may not share on other concepts, but listen carefully. Okay, so watch. Right. So now when we're looking at time-based trading, we have a pro, right? The only pro that we have is we can leverage market patterns that occur at specific times. So there's also less reliance on price-based indicators, not time-based indicators, price-based indicators, right? So if you have a bullish engulfing, bearish engulfing, whatever it may be, for that particular case, if the time is right, for example, if it's the 90-minute liquidity cycle inside of London, then it's going to work out. Okay, as you guys will know in my next video, which I'm going to be talking about the fractal dealing range that's involved in my London time range model. Okay, so these things actually work when it's the right time of day. Actually, anything will work when it's the right time of day. So that could be your trend line breaks, that can be your support and resistance retests. Everything works inside of the right time of day. Okay, but now the only con, right, is that it requires a deep understanding of market schedules, right? So because when you think about time-based studies, there's basically a lot of things that you need to think about, right? What happens here, what happens there, what happens at this time, what happens at New York Open, what happens at London Close. There's so many things that you should think about. Okay, and also at the same time, with time-based trading, we can be affected by unexpected news events. Now, these unexpected news events, it's a double-edged sword, right? Whereby we have the high impact news drivers on one economic calendar, but then there's a high impact news driver that shows on another economic calendar that does not show on the first economic calendar that you have seen, right? So you have to be aware of every possible news event that's going to affect your trading, because news releases, they occur at a specific time. So that is also a factor that you must take into consideration within your time-based trading model. Okay. Now, why are time-based trading models, why are they superior to pricing models? Now, here's what you have to understand. Time is the only external factor that is not visible on the charts. Okay, so time is the factor outside of the chart that moves price. Now, listen carefully. Time is the factor that is outside of the chart that moves price. So, guys, who has been right all this time when it comes to timing models? I guess you know the answer now. All right, time is what's outside of the chart, and I got the source. All right, so any and all types of pricing models, they will work 100% of the time, given the required conditions have been checked off. So within a particular time of day, if that time-based condition has been checked off, if it is true, right? If that particular condition is true within that time of day, then whatever price pattern that you're looking at, whatever bullish pattern you're looking at, whatever bearish pattern you're looking at, that is going to work. Now, when we talk about price-based trading, so the only pro is that it's more traditional. A lot of people use it, right? And there are a lot of tools and resources available, and it can be used in any market. You can add indicators. You can literally make up any price action pattern that, that has a statistical backing, and it will work out, right? But by themselves, they really will not work out, okay? Because the only con is that while price-based trading can be reactive, based on what price is doing, you're going to react based on what it's doing, right? So you might miss out on opportunities that time-based traders catch, because time-based traders, they're waiting for a particular time in which they know that, okay, what 80% of the time the high or low will form at this spot, whereas price-based traders, they don't give a shit about that. Yeah, they are basically trading what they're seeing. That is also something that time-based traders can do, something that they can adopt. But you see, time-based traders can adopt or adapt that reactive nature to, react in a price within that time of day. So you can see how then that would also make being reactive high probability. Okay, because you have Malaysian SNR, right? So in Malaysian SNR, you will usually see that when you get that sharp reaction and it's not the correct time of day, it's just gonna do that. And then it's going to go down later. Right? That's a very good example of how price is not it, right? You can have Malaysian SNR, you can have some bloody algo concept, whatever that uses price. It's not going to mean anything without time. Okay. And when I say time, I mean the correct time. Everything that I'm seeing online, I just laugh at it because it's not correct. Okay, and who am I to say it's not correct? You might have that, right? Because I know you are going to come at me in the comment section. Well, you're welcome to join the private group and find out. All right. Okay. Price-based trading models. So why they are inferior to time-based models, right? So understand this. Price offers moves that happen either too early or too late, if you, of course, exclude the time aspect from this discussion. So price and time conditions must go hand in hand with the two functions of price. Okay, so have you ever wondered, like how I showed you now in the theoretical example, why a massive down move always gets traded back to completely? And then price also goes and takes back the high, takes out the high, taking all existing positions of the marketplace? Yeah, well, that's because the time was not right to sustain that delivery, right? So to conclude, what have we learned? We've learned that while price-oriented trading helps with catching moves from here and there, right? The actual moves that remain sustained come from trading price within the right time of day as time delivers price. And guys, at the same time, the October Bootcamp enrollment has begun and it's only for select individuals, okay? So you got to DM me for more info because I'm not going to let anyone and everyone join. You're going to have to go and you're going to have to come book a Zoom call with me, and I'm going to check if you are really going to be a part of our community. And if I do think that you are a good fit, yes, you can go ahead with finishing your enrollment process, right? So if you want, you can send me a message on Telegram if you are interested, and you can also fill up your name, basically fill up all your details in the Google form that I'm going to be posting down below in the description box. And if you are interested in the October bootcamp, I will send you a message and we can book a call and I can ask you a few questions and we can see if we can move forward from there in beginning your journey with the Trading Academy, in which we will discuss the fractal time theory, fractal dealing ranges theory, and my fractal liquidity sequential theory. So with that said, I'll see you guys in the next one. Good luck and good trading. Bye-bye.